It's April 14, 2014, current time 10:30 GMT. Jay Meisler here with the daily Forex trading outlook. Before I go on and look up the market, let's discuss some other things because there are other events going on that could have a significant impact on the market. First is Ukraine, which continues to simmer. I still say the market will not react in any significant way unless that situation intensifies and then we get into some sort of a Cold War between the U.S. and Russia. Betting on crises escalating has been a losing battle for a good part of several years now. If you overstay your welcome. So let's see how that plays out, but it is a cloud overhanging the market. The other thing is what's going on in with the ECB and the euro. There is a verbal intervention going on. I've been saying since the beginning of the year that the only logical course of action for the ECB would be to engineer the euro lower, eases deflation risk, give some stimulus, and in a low inflation environment, having a weak currency is, to me, a no-brainer. We seem to gotten to the point where they're jawboning, but in the end, the market's looking for action more than words. What's essentially happened is Draghi has now confirmed, among others, that if the euro gets too high, they're going to have to ease monetary policy. So that kind of puts a cap on the euro dollar, and as I've been discussing, 139.67 seems to be the high. You can make a case that it's the high for the year. We got up to touch 139 last week, but we're now back closer to 138. So that's your key level on top. And why push the euro dollar higher? If you push it too high, then the ECB will step in and ease rates and push it down. So, and there was a time when the market would test the ECB resolve, but it doesn't really seem to have that fight in it anymore. Well, whatever the case, actions still speak louder than words, and all we have are words so far. To send a signal, they want a weaker euro, it's going to have to be followed by policy action. And I just read on Trade the News an update saying that chatter is now they could shift to, they could go to negative deposit rates at the June meeting. So with that overhanging the euro, it suggests a top, at least a limit on its upside. Whether it goes on to the downside means it really has to first crack 138 and stay below, which would raise talk of maybe a 135 to 138 range rather than the current 137.50 to 139.50 or 137 to 140 range, as some have been trading. So that's where we are right now, kind of in limbo land, but the market at least has something to look forward to, and perhaps that's some ECB action to engineer the euro lower. When that comes, the market will have a green light to sell. Until then, can only speculate. Other thing we have, this is a week normally where traders do not, or investors or whatever, do not make big bets. It's Easter. The Easter break is coming up in the Northeast. At least I could speak for the New York side. Schools are all closed this week. It's a big holiday, big traveling week. So market's not trading with a full deck. And as I said, not a week where you normally would see big bets. If you see a currency move, it's probably some sort of a liquidation. You got to watch stocks after the week showing last week. See if that carries forward at least into the new week. And see what the safe haven currencies will be. So you got a fairly full slate of economic data. If U.S. data starts coming on the stronger side, that's one thing to watch. The other side, you have earnings are coming out, and it seems the market has lower expectations for U.S. stock company earnings, and see how that affects the stock market. So that's it for what's going to be a thin week. A week, I said, not one where there are usually big spec bets, because there's a big break in a good part of the world next Friday over Monday. So let's look and see what happened in the euro dollar. We gapped. You can see right here we gapped lower, held last Friday's low around 138, 135. came back, filled that gap almost perfectly. Twice actually, but really perfectly, and then we came down to around 138.15. So that's it on the 1 hour chart. If you look in here, there's support here at $137.75, and ahead of that is 137, currently 90, which is a 200 period moving average. Look at the 4 hour chart. Very similar, filled the gap here. 4 hour shows support at around the same thing, 137.79. So really 137.80 to 90 on the downside, although 138 is more important in setting the tone. On the upside, it's around 138.63. So if we revert to the old my old my favorite way of looking at it, if we've seen 137.50 and 138.50, 138 is going to set the tone. If we stay 138 to 139, 138 to 139, then 138.50 will set the tone. Currently below it, but just consolidating. In the daily chart, we broke the trend line, the downtrend line. So we went up 1, 2, 3 days. Now we're coming back down. You got the 20-day moving average is just below 137.50 also is around there. 138, I'm sorry, below 138. So you got a whole cluster of support there between 137.80 and 138. So I would say that's initially key support on the downside, and the upside 138.35, which is the initial low overnight, to 138, let's say 65. That's it. Watch US data. I'm going to put a link to an interesting article on the bottom here. What differentiates a winning trader from a losing trader? I think it's really worth reading. It's written by a very savvy trader and one without an agenda. So if you want to click on the link, it's right in here. And we'll touch base later on the GBI side, and also with another video coming up tomorrow morning. Good trading, good luck, and try to click this link.